SoundHound AI is undoubtedly one of the hottest AI stocks in the market right now. Shares have soared by more than triple since October, rising to $17 a share as of this recording, when they were just less than $5 a share in October. Overall, in 2024, they've increased from around $2 per share to start the year up to $17 right now. So is that too much, too quickly for SoundHound AI, or will 2025 be a similar year? That's the question I'm going to address in this video. I'm going to discuss whether or not you should buy SoundHound AI stock before 2025 because of the prospects ahead. So I'll look at several important financial metrics to answer that question.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Look at this phenomenal share price performance for SoundHound AI, which got incredibly popular to start the year in 2024 because of interest from NVIDIA. NVIDIA purchased shares of SoundHound AI stock as a strategic investment. Then as the year progressed, the stock price remained flat and was actually down from those early year peaks. But then after October, it surged again, more than tripling since October, trading at $17 a share right now. Looking at SoundHound AI's trailing 12-month revenue, you can see excellent growth here to $67 million in trailing 12-month revenue, up from around $20 million in 2022, so more than tripling its revenue. Some of that is organic demand growth for its products. Most of it, or I shouldn't say most of it, and some of it is from acquisitions. The company has been very acquisitive in these last couple of years, using its higher share price to acquire other companies that could benefit in the category SoundHound AI is trying to expand into. Right now, the two categories that SoundHound AI plays an important role already is in automotive and in restaurants. So in automotive, SoundHound AI, it makes incredible sense, right? When you're in your car, you don't want to be communicating with your devices by touching them or typing things on them. It's safer to communicate and more convenient to communicate by speaking to your car and telling the car what you want it to do. And so that's already an incredible area for growth for SoundHound AI. The other area that's ripe for SoundHound AI to penetrate is restaurants, especially the drive-through category in restaurants. The drive-through interaction, customers to cashiers or customers to order takers, has not been ideal, and I think customers would enjoy a better service that can take their orders and offer information. Maybe if you have a question about a menu item or what's possible, what kind of customization is possible, or what new thing they might have, a person might not be trained on all of the information on the company, especially when you're looking at these restaurants. Employees are younger, less experienced, and less trained. And so if you have an AI that's trained on the company's proprietary data and a customer comes in, that's a huge advantage, because now that AI will have all of the information, all of the proprietary data, and can offer customers a better experience. SoundHound AI will help with that. So those are two categories it's already expanding in. And there are others, of course, where SoundHound AI, its technology, its voice recognition, voice AI technology can benefit. That being said, the company's cash flow from operations has been trending downward in 2024. It had demonstrated excellent improvements in 2023, and then in 2024, it turned around negative 89 million. It's always been negative, but at least it was trending improvement. Now it's trending backwards. Part of this is the acquisitions I talked about. While the acquisitions are not counted, the price they pay is not counted in cash from operations. That's counted on the cash flow from investments section in the cash flow statement. But where it does impact the cash flow from operations is when you try to digest the company, right? You're bringing on new people, you're bringing on new expenses, and all of those added expenses, especially when you're acquiring companies like SoundHound is, companies that are losing money on the bottom line and companies that generate negative cash flow, those negatives add to the negatives you're already generating from your existing operations, and it just worsens the cash position. Still, SoundHound AI is optimistic that these acquisitions will be beneficial after they digest and they find the areas for synergies and find the people that they're going to keep and the people they're going to let go, incorporate all of the cross sell opportunities, right? They can cross sell the customers they're acquiring from the acquisition to their existing products. And so over time, they're optimistic that their cash flow and their adjusted profitability will return to growth. And their return on invested capital is already demonstrating excellent improvement. You could see the trend line here from negative 480% all the way up to negative 53%. So they are making progress in terms of getting the losses, shrinking the losses in relation to the capital that they're investing. They're already demonstrating to investors that they're prudently managing their capital. Finally, let's look at the company's valuation. Now, because they're losing money on the bottom line and because they're negative cash flow from operations, one of the few metrics I'm left with as a choice to value this company is the forward price to sales ratio. And when measuring by the forward price to sales ratio, SoundHound AI is trading at a forward price to sales of 38. This is the most expensive this stock has been going all the way back to 2022. In fact, it's way more expensive than where it started the year, where it was trading at a forward price to sales around 10. It's now quadrupled that valuation. So in my opinion, while SoundHound AI has excellent prospects and they're growing in the areas where they should be growing and the opportunity is large, I think the valuation is rich. So if I were to answer, should investors buy SoundHound AI before 2025? I would say the answer is no. I think the valuation is too expensive at this point compared to its prospects. I think it would be more prudent to wait for a dip in the share price or to wait for an acceleration in the company's revenue growth or an improvement, a turnaround in the company's cash flow from operations metric, something that improves the fundamental prospects of the business when compared to the price you're paying. Because right now, the price you're paying for SoundHound AI stock is very, very expensive. As you can see on the chart here, it's the most expensive it's been in a long time, going all the way back to 2022 when its revenue base was much smaller and investors were a lot more enthusiastic about these unprofitable growth stocks. Remember the rich valuations of early 2022 and late 2021. So that's my conclusion. I'd be interested to hear your thoughts. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.